everybody, this is Pat Walker at Mission Winners doing the video overview on the ETFs. Why do we look at the ETFs? It's not because we like to look at a ton of charts, all right? We've got a limited amount of time, so we might as well use it wisely. What do? We look at the ETFs. Here's a fact. Leading groups produce leading stocks produce leading groups. So when you look at the ETFs, you can look for strength, areas to maybe dig deeper to find some leading stocks in that group, or buy the ETF, but it also teaches us areas to stay away from. And again, both sides of that coin are powerful to know. So here's weekly on the left, daily on the right. Cloud computing. You can see that it was forming kind of a cup, maybe forming a handle, but it's pulled back since then and it's sloppy. Be careful with that. What does that say? Be careful with cloud computing stocks. The next one, commodities. You can see it's dropping on the weekly and it's dropping. It's telling you in 1 second, it says I'm staying away from commodity stocks. Done. You don't have to overthink it. Move to the next one. Diamonds, Dow Jones Diamonds. You can see that's the ticker symbol always. This is the always ETFs. And it says, well, maybe a higher low for them in here, but it's pretty darn sloppy. Not much good going on in the Dow. Move on. That's good to know. Autonomous vehicles. Pretty choppy here on the weekly. Pretty choppy here on the daily, okay? One that's really done well for us over the years is Tesla, but the ETF so far is a little sloppy here. Be careful with that, okay? That'll help you. Dow Jones Internet. Now look at this. This doesn't look too bad, does it? I'll draw a line for you. Go across these tops right through here. What does it need to do? Push through that line and push through with really heavy volume. That's what we want to see in a good market. So you can click on FDN, find out, and this is the first trust, Dow Jones Internet, find out what are their top 10 holdings. Maybe there's something good in it. Systematize. That's what we do. I'll say it again. We have a limited amount of money and we have a limited amount of time. We use both of those assets wisely. Continue onwards. IBD 50. I mean, folks, this is a great proxy. This is the IBD 50, the stocks that the newspaper, which is a great paper, have picked, okay? They're anointed. But even this is pretty darn sloppy. Look at that. And that's not criticizing the paper. It's just telling us that, hey, the market's kind of rough. Look at the weekly. Look at this. It says, be careful. And that's good to know. First Trust Dorsey, right? Okay. Technology related. This is pretty sloppy, folks. There's not a lot of power there. I'd be careful with that. All right. China, lagging. Daily on the left, or weekly on the left, daily on the right. It's below the falling 50-day. Here's a maxim for everybody. The air is better above a rising 50-day moving average line. Just something to remember. China, be careful with China. Gold miners. Now look at this. Compare and contrast. This is looking decent here. GDX. You could sit there and say, maybe I should look into some gold mining stocks. That's why we do this. All right. Is maybe there's something in the gold mining area. Gold. Look at this. Look at how this has been trending. What has it said? What is it saying? They should be looking at some gold stocks. Isn't that great to know? I'm not saying buy it now, but I am saying it has been demonstrating strength. You could be looking at some gold stocks. Biotechnology, this is maybe a higher low, but it's below all the moving averages. You're not going to see this set up in any chart book anywhere saying this is what you look for. It's pretty sloppy. Be careful with biotech. Oil and gas, lagging, nothing great there. Be careful with oil and gas. Technology, software technology. Oh, look at this. And again, you can always see the name there. Tech software. This is basing here. What does this tell us? And you're going to hear this again and again during this video, I will tell you, because we're involved in technology and software. Look at the base. That's decent. A lot of stuff looks like crummy junk. This doesn't look too bad. And it hasn't looked too bad. What has it been saying? You might want to take a look at some software and technology stocks. You could punch up IGV and find out what their top 10 holdings are. There you go. That's power for us. That's what we do. Right here, Dow Jones Medicine. This isn't so good, okay? It needs a shot. I know that's dad humor. I have to say it. My kids would be shaking their head. My grandkids would be shaking their head. So leave that alone for right now. Mid-cap, lagging. I mean, just hit lower lows. Hit lows for the move on Friday. There's no power there. Move on. Stay away from mid-cap. Aerospace and defense, hit lows for the move on Friday. Nothing, no power, move on. And again, I'm not trying to go fast. I'm just trying to lay it out. There's nothing there. Don't overthink it. If you can't see it, or if you have to look for it, it's probably not there. U.S. home construction. Now this one's basing a little bit. Here, I'll take that line off. There's a newer line here. I'll draw for you. Kind of close to these tops here too. And you don't need, by the way, you don't have to do it to the penny. Just get it close to the points right there and say, yeah, maybe if it takes out those highs. So what does that say? Maybe look into home construction. Still not super powerful, but better than some of the others. There you go. ITB. ITB. Growth. Growth ran up. S&P 500 growth, IBW, ran up. It's pulled back. Little choppy here, but it's above the moving averages, and that's a plus. At least it's above the moving averages. And what does that say? Well, growth isn't too bad. There's a reason I say that, and I'll tell you this. What are we involved with? Some growth stocks. They're outperforming. There we go. We connect the dots. Small cap. Hit lows for the move right here. What does that say? Stay away from small cap. Done. That's it. You don't have to overthink it. Continue on. Dow Jones Real Estate hit lows for the move on Friday. Stay away from real estate. Transportation hit lows for the move on Friday. Lower lows, stay away from transportation. Airlines grounded. Okay, I had to say it. I'm sorry. But what does this say? The chart. Stay away from the airline stocks. Done. Done. Leave it alone. Focus on strength. Regional banking, lows for the move. Stay away. Biotechnology, lows for the move. Stay away. Mid-cap, lows for the move. Be careful with mid-cap stocks. Oil services, lows for the move. Pharmaceuticals picking up a little bit. Has a higher low, but it's below the falling 50-day. It's a tough setup, folks. Look at the weekly. Be cautious, all right? Dynamic software, another software ETF. You say, well, that one doesn't look too bad either, does it? No, in comparison to everything I just showed you, this is a hair above the rising 50-day. Maybe it'll go across these tops. Right here, I'll just draw something for you. We'll make it simple. There you go, close enough. Take out those tops. I'm not saying buy it, but I am saying software doesn't look too bad. Maybe look at some software stocks. Now, by the way, I give you a heads up. This thing trades really thin, so be careful buying stocks that don't do a lot of volume. That's important to remember. QLD, look at this. I just showed you what? 20 ETFs that look pretty bad? What do you see here? I see a cup formation. What is this? It's the NASDAQ 100. What's in the NASDAQ 100? The big tech stocks. What have we been involved with at Mission Winners? Big tech stocks. We go where the money's going, and it works. And this doesn't look too bad. It's forming a cup. Look at the base here. It's forming a cup. Maybe it'll form a handle. By the way, I already have the price alert set. You see it? We'll be ready. There you go. QQQ, same situation as QLD. I love QLD. I like the leverage on it, okay? Retail, there's nothing in retail. Stay away from it. Silver's picked up a little bit. Not too bad. Maybe looking at some silver stocks. Steel, lagging, nothing to do with it. Semiconductors, another technology area. Do you think that there's some big software or technology stocks, semiconductor stocks in the NASDAQ 100? You bet. And this is telling you, it's not acting that bad. Semiconductors, and it hasn't been acting bad. S&P 500, this has a higher low, but it needs to show some power. It's pretty darn sloppy. Be cautious. SSO, same situation. Higher low, but pretty sloppy. Solar, stay away from solar. The treasuries, related to the bond market, naturally, and interest rates, okay? Chop it around. Some of this wild movement here is related to the banking situation that's going on in this country and worldwide, a lot of different areas. It just says, yeah, be a little careful with the interest rate sensitive stuff. Small caps, hit new lows for the move on Friday. Stay away from small caps. That's it. It's done. Oh, I'm going to find the bottom. You know what? That's an ego game. Focus on strength. Strength begets strength. Key on that, and you'll dramatically improve your investing results. There you go. Uranium, nope, nothing. Oil, lagging, nothing. Consumer discretionary, it's not, there's no power here. The consumer's not buying much right now. Aerospace and defense, there's nothing there. Move on. Biotechnology, hitting new lows for the move on Friday. Leave it alone. That's a powerful statement right there, folks. Again, what to look for and areas to avoid. Continue onwards. Home builders, yeah, it's below the moving averages. There's not a lot. Compare and contrast this to back here when it was moving up. All right. Simple investing maxim for everybody. The air is better above the rising 50-day moving average line. There you go. But materials, how do you build things? You need materials. That's lagging too. Stay away. Communication services, technology related. Now this one doesn't look too bad, does it? XLC. You can see this base coming up here and it's lifted up a little bit. Maybe it'll form a small handle here and take off. It could do this, and I'll show you something that we use. Maybe it's going to do a low-level cup with a handle through this spot right here. You'll watch and see. But what is it going to need? It's going to need heavy volume through that line. Why? Because that's a big, ugly reversal bar on heavy volume. That's why we take a look at price and volume. Energy, basically darn near new lows for the move. It's in a downtrend. Stay away from energy. Done. Financials, new lows for the move. What has this been saying for a while? Stay away from the financials. There's power in knowing that. Again, there's a lot of stocks out there. Why don't we systematize things and say, I'm going to look for where there's strength in the industry group. That'll also help me find the leading stocks in that group. There you go. Excel industrials, lows for the move, leave it alone. Technology. Now this doesn't look too bad. Look at this. Look at this hitting big down near lows of the move, right? This doesn't look so good. Then you go here and you say, yeah, financials, that ain't no good. There's power in knowing this. Industrials, nothing there really good. Technology, this is what I wanted to get to. Look at XLK. I showed you a bunch of ETFs that were looking pretty ragged. This is hit new highs for the move a couple of days ago. What is it telling you? Maybe look at some technology stocks. There you go. And guess what? What else do we know? Think about this. Which index is leading? The NASDAQ or the S&P 500? The NASDAQ is. What's heavy in the NASDAQ? Technology. And you got further confirmation here. What am I saying? Look at some technology stocks. Look into the MAXLIST. Consumer staples, there's no real power there. Healthcare, that's lagging, really not a lot of power there. Consumer discretionary, there's no power there. Leave it alone. Metals and mining, it's below all the moving averages. Just leave it alone for right now. Oil and gas is lagging, leave it alone. Retail, they're not shopping, are they? Attention, Kmart shoppers. How about that? They're not buying, leave it alone. I had to do that, sorry. Software, another software ETF. At least it's not hitting lows, it's got a higher low. Technology related, there's no leadership with it at this point in time. But I will share this with you. This is a cold, hard reality. If I could only look at one list of stocks, only one, it would be the MAXLIST. So what do we do next? We go to, and you know it, the MAXLIST stocks. Well, I just showed you some ETFs that look pretty crummy. I look at this and say, gosh, this sucker's hitting highs for the move. Please know this, by the way. I'm being really honest and sincere here. I'm not being a cheerleader, okay? I'm just pointing out the pluses and the minuses of the charts to help us make better investing decisions and also be safe. Well, this just hit highs for the move. That's good. Pulls back on decreasing volume. A price alert set. Maybe this is going to lift off. We'll have to watch this and see. So what's a candidate here to watch this week? Apple. I'm giving it to you. By the way, I'm not saying it's going to break out, okay? Please. But it looks stronger than a lot of others. Here's Amazon. You've got some clean tops here on the weekly. You've got some clean tops on the daily. We actually bought this through here and sold it, locked it in because it just got too choppy. But maybe this is going to start lifting. Support on the rising 50-day. That's the green line. Something that bears watching. Close near the highs for the day on Friday. Amazon. Not really clean and simple right now, but it's outperforming a lot of other stocks, as you can see. Continue onwards. On the other side of the coin, here we go. You said, oh, that looks decent. It's above the rising 50-day. That doesn't look so good. Done. Move on. I mean, I know you can see, oh, there's a little base right here and there was some volume there. I'd like to show you something here. This is something most people don't really know, but it's something we teach in Mission Winners. Just because it's a green bar does not mean it's a good bar. Just because it's a red bar does not mean it's a bad bar. Do you see this bar? You go, oh, it's a green bar on a pickup in volume. It's good. I'll make this bigger for you. This is a great lesson right here, folks. This is what we teach. Look at where it opened. It gapped up. It ran up. and it closed below where it opened. Folks, it was met with selling pressure, and it did it on a pickup in volume. So what does it need to do? Maybe form a handle here, base a bit, and then lift off with really heavy volume. There you go. I'm not saying that's going to happen, but maybe it will. And you've got, I'll just draw this for you too. Close enough for, there we go. There you go. Watch and see. Watch and see. But do know this. It's, it's below the falling 20 day. It's below the falling 50 day. Tons of overhead supply. Not a high probability setup. Okay. I just wanted to share that. Let's continue onwards. BIDU. I'll tighten this up a bit. Look at that. I just showed you something that looked kind of crummy. You go, gosh, look at this. Now, what's the one negative? On the weekly, it doesn't look bad either. What's the one negative with this chart? Runs up, runs up, tail bar, drops. 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 But on this one, it found some support. It's basing here. Maybe this will start to lift off. The best thing it could do would be to go to sideways a couple of bars and form a handle and then take off. But in relation to a lot of others, it doesn't look too bad. Let's continue onwards. Google, what do you see here? I see a cup with a handle. By the way, we talk a lot about this in Mission Winners. You see the clean and simple flat base right there? And I'll do something for you. This will help. There's some tops going across here. Ain't nothing too fancy. I guess if it takes out that wide line on volume, had pretty good volume lifting up there through the 50 day. Maybe if it goes and takes out that line on volume, that'd be pretty good. Oh, gee whiz. I guess other people saw it too. Right through here, it was on the key list the day before and this was bought. There you go. And it's working. There we are. Is it going to continue? I don't know, but at least it's a start. But the key lesson, clean and simple flat bases that everybody can see, they work more than they don't work, okay? You can say, what do you mean by that? They work, they are more successful, okay, than failures on this. But does it work every time? Nothing works every time, which is why we love clean and simple flat bases, because if it doesn't work, price is good above the line and bad below. It helps you keep losses much smaller. And I need to share this with everybody. No day trading. I haven't looked at a 5-minute chart this year, okay? I didn't look at my 5 last year. I don't look at 5-minute charts. I don't scalp. I'm not in it. It's too much work for too little money. Big money is made in riding trends, okay? So, but if you're doing that and it's working for you, good for you, okay? That's good. I'm happy for you. But I like buying and letting it work. So maybe it's going to form a little handle here and take off again. We'll be ready. Goldman Sachs, in 1 second, it says, I ain't buying Goldman Sachs. And you know what I say? Good job. Let's continue onwards. MasterCard, choppy. Look at this. There's nothing here. Leave it alone. Meta, look at the clean and simple flat base right here. You see those tops? And I'll do something for you. You say, oh, okay, well, it ran, there's a base right here, a couple bars here, and then it ran up here, and then it pulled back. Gosh, I guess if it takes out that line right there on volume, that'd be pretty good. And it does. Look at the volume pickup, pushing through that line we bought. Then it runs up to the old tops right here. And then it pushes through there, and you buy more. There you go. And then it comes down, and it's working. Comes down and tests the line, and now it's working. You don't go big here because the market's still sloppy. But note the clean and simple flat base. Note the MAXLIST stock, right? That's, love it. Continue onwards. Microsoft. Bases here, lift it off. Okay, looks pretty good. We'll see what happens here. Maybe it'll start to kick up again. And guess what? If it does, if you don't own it, maybe it could be a buy. And if you do own it, you could add to it. Rules of proper pyramiding for everybody. And again, I was an IBD meetup co-leader for 12 years, firmly ingrained in all this, okay? Remember, if your first purchase is X number of shares, whatever that is, your next purchase must be a maximum of 50% of X. So let's talk numbers. If your first purchase is 100 shares, the most your next purchase should be is 50. All right? I'm encouraging you. Rules of proper pyramiding. Never pull up your average price too high. okay? And another point I want to make for everybody, never average down. You are wrong. Don't make yourself more wrong. It'll eat you up alive if it keeps falling. So, two types of capital in the markets, financial capital and mental capital. It's a compulsory that we protect both. So there we go with Microsoft. Doesn't look too bad. Let's continue onwards. Netflix started to lift up here, okay? Lot of overhead supply, lot of overhead. It's got resistance right here at the 50-day. What would be nice, by the way, you see the tops right there? I'll just draw it for you. Let's get her close. That's it. That's close enough. There it is. If this could base for a couple of bars and then push out and take out these highs, which would also be corresponding with pushing through the 50-day, that could be a plus. But it's made a fast move to get here. It's pretty aggressive to buy up here, okay? Just wanted to share that with you. So it's something bears watching. NVIDIA. See the clean and simple flat base right here? Everybody can see it. Yep. And we bought it. There you go. And that is what I call sweet potato pie. They all don't do this, but it's nice when they do. And then look at this. Clean and simple flat base pushes through right here on a pickup in volume. They bought more. There it is. It's vanilla. Or it could have been a new buy. We have members that it was a new buy. We have members that it was an add-on. There it is. Vanilla. There is the chart. Now, you could say, what do you do with it now? You could sell some into strength. Would you buy here? No, it's too extended in price. Buy right, sit tight. Don't chase price. That'll really help you. Okay, folks? Do something here. I'll raise that upper alert and lower alert. There we go. Let's continue onwards here. Tesla. You can see the bigger picture tops on the weekly. And you look here. And by the way, I'm doing this real time on a Saturday. There you go. You've got a top here and a top right in here. Just a clean and simple flat base. It's nothing fancy. What do we want to see? Folks, I'm giving it to you. If it takes out that white line, that could be a buy. If it does, you need a good market. You need good price and volume action on the stock. Pushing through that white line with a big pickup in volume on the daily and or the hourly or 30-minute charts. No volume pickup, no buy. Right there. That's $1 million lesson if you learn it and apply it. There we go. So we've got a base right there for some more. And it looks decent on the weekly too. I see a couple with a handle here or an inverted head and shoulder bottom. Visa, it's too sloppy. There's nothing there. Leave it alone.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.